centers, cinemas, centers, entertainment parks, schools. ठीक है, समझ आ गई? Good morning, United Kingdom. Good morning.
Good morning.
Lakhi Singh, the property fixer. 8 a.m. to 9 a.m. with Lakhi Singh, the property fixer, solving all your property and business problems as usual. Talking about the topics of the week, talking about topics that interest people, talking about how to fix your business and property problems. And we go around and we come around and we talk to guests as well that we invite who have got knowledge in different areas of business and property, famous people, people who are from different industries like entertainment, music, philanthropy, social care, etc., and people who are just into property, people who've been working, self-employed, freelance, people who have had the experience of being self-employed and then gone into becoming business persons, etc. So we have all the different mixes, and we're going to try and start a live call-in question time. So anybody with questions who is typing their question in or typing in their comments will have the opportunity to be dialed in and make their comment or question the audience with the guest speaker and the panel about any question to do with property and business. So Lakhi Singh, good morning. What's the weather like there in the United Kingdom for the property fixer? The saying of this week is, I have no clue, but I shall remember. And that is, one day or day one. You choose. The meaning of that we will ask for Lakhi Singh. So one day or day one. We'll ask that of Mr. Singh, what it means to him. And obviously, the underlying topic of this week is, can you build your property portfolio with Bridgingfinance? Can you start from nothing and build an empire of properties with bridging? So, Lakhi Singh, what's the weather like there in the United Kingdom? The Lakhi Singh, the property fixer.
The weather's quite nice. It's quite a sunny day. It's not warm necessarily, but it's not overcast and it's not raining.
Excellent. So having an effect on the weather as well, Lakhi Singh, the property fixer, possibly because you've got a black eye. The sun is out, shining, smiling down on your misery, as most people do. They like to see other people suffer, as is the case with myself. I also like to see other people's misery and gloat on it sometimes. So, sir, how's your black eye?
Yeah, it's absolutely fine.
Excellent.
It looks a lot worse than it is.
That's what I thought you were just going to say. Is the sun shining out and smiling this morning, looking down on your black eye, or is it just coincidence?
Yeah, I think it's definitely shining on my black eye. So it's brightening up my day.
Excellent, sir. So what have you about the UK economy? Where is it all going? Anything new and worrying or uplifting that's come out of the local media to do with the United Kingdom business and property market? Anything that you've got to tell us, news that we should be reading up about?
Well, yesterday there were some major announcements. A lot of people on tenterhooks worrying about whether their business is going to survive the lockdown. So they've got 3 levels of alert now: low, I think medium, high, and then very high. And so there's certain stipulations of lockdown in certain areas based upon whether there are whether they're a high or a very high. If it's a very high, then they are closing down lots of restaurants and pubs altogether. So the lockdowns in the Liverpool area.
Excellent.
But the rest of the country, I think, is considered either high or medium. So there's certain stipulations around what can and can't be done.
Mm-hmm.
So can't remember all of them because you have to literally, there's a list of what's what, but it'll probably come quite common, the list, as we go on, because everybody will need to know it and what's going to happen.
Yeah.
But London
is it a bit disjointed, Lakhi, like before when they had the initial restriction on gathering, where they had one council saying a gathering is perceived as 2 people, and another council saying 6 people, another council saying you can't meet indoors but you can meet in the garden, and the third council saying you can't meet in the garden but you can meet in the house. If you got a house of people that are more than six in number already, then you can't meet each other in your house, and you've got to be 6 foot apart from each other, which means the toilet has to have a queue back to the kitchen. Is that the type of thing that's happening now? Is it?
Basically, what's happening is that the central government, they don't really want to be seen to be the bad guy, I think. So what they're doing is they're trying to decentralize decision making to local councils. But they're somewhat dictating at a central level, but they're allowing the councils to, let's just say, roll out their interpretation of what they think would be the best way of rolling out the central policy.
Okay,
and so there are ambiguities, like you say.
I think
so there is sorry?
Lucky, in all fairness, just to say, that is the general policy when they roll out any governmental bill, and that is the government gives its guidelines and local councils are free to interpret those guidelines as they see fit, just like any other policy. So in fairness to the government, I don't think this is new and unique that they're trying to show themselves as back. I think that's the way government in the United Kingdom operates. Central government gives the policy document, the white paper, and then local government takes the white paper and then interprets it in its best form. That's something that's quite normal. So, and you were saying, what else about it? So each council is to their own interpretation.
That's right. So I think all they're doing is they're just putting a structure together. So if they find that one particular region has a higher level of deaths or a higher level of people getting COVID-19, then they're basically saying, oh, this is very high, so these rules have to be implemented. So I think it's nothing too sophisticated. It's something quite simple. But I think there's lots of contradictory views about how people interpret what the government's saying. And a lot of businesses, if they have the lockdown placed upon them, they don't think they'll survive the next 6 months. So they're literally having to shut up shop for good. So it's a huge implication for areas outside London, and there's a lot of let's just say there's a bit of a backlash from local communities saying, how come the elite London is not affected, but there's quite a high amount of COVID-19 over there. So there's a bit of an ill feeling about lockdown. I think certain people aren't really willing to accept what's going on. So there could be some sort of a rebuff from people. I don't know what they're going to do or how they'll do it.
Well, you're saying that is treating London like royalty and everybody else is a commoner, basically. So are you treating everybody else across the country a bit like a commoner? and like
Well,
a
that's
mini.
what a lot of people are interpreting it as. I don't really know the actual full stats, what's in London and what's in Liverpool or otherwise. I haven't gone into that level of detail because I've tried not to make COVID-19 my day-to-day mantra or anything.
Yeah.
Sorry?
The center of your day. You're not trying to make it at the be end and the do all of everything. You're trying to
That's right.
concentrate on important stuff.
Exactly.
Okay.
So going
Okay.
back, going back to the topic of today, which is
Yeah.
buy-to-let property, is it still something that can be done with bridging finance?
Yeah. Can you build? I tell you what the question is. The underlying question is, can you build a multi-million-pound portfolio using bridging finance? Really, if the banks aren't lending and things aren't really happening, everything's slowed down. Could you quite cleverly use bridging finance to create a multi-million-pound property portfolio? Yes or no? Is it a good?
Yes, you can.
Okay, good.
One of the before we go on, I think I saw a question in another group today when somebody had written, "I've got some money, but I want to buy a property, buy-to-let property. Is it a good idea to get into buy-to-let in this market?" And the majority of the answers that people gave were saying no, it's not a good idea to get in, because I think the main reason they're giving is that because of the uncertainty, they wouldn't really recommend it. So there is a let's just say element of that. If I would actually counter that. I would say it's not because of uncertainty. If you don't have the tools in place, you don't have your power team in place, you don't have your business plan in place, and you don't have the right sourcing structure in place, yes, then there will be a lot of uncertainty because you're working with a lot of unknowns. So just to give the audience a few strategies to counter that and use bridging, the way that would work is the ideal position is that if you've got a portfolio already and it's fairly lowly geared. So my advice is if you already have a portfolio, we'll work on 3 different parameters. If you've got a portfolio, if you're halfway starting a portfolio, or you where to start. So we'll look at somebody who's already got a portfolio first to keep it simple. Then we'll work at the other 2 levels. Similar to what the government's doing in terms of COVID-19, we'll just do, if you've got a very high chance of success, you're a mid-type portfolio owner, and you're a startup portfolio owner. Okay, so 3 levels. So level 1 is you've got about 10 properties. They're worth about £2 million, and you bought them 15, 20 years ago. The gearing on them is about 10% loan to value, so the debt's only 200,000. 2 million portfolio. You've got a house that's worth 500,000, which has got a £50,000 mortgage on it. I would probably say that's actually the perfect storm, because you've got access to finance from your house, you've got access to finance from your portfolio. So number 1, you're going to be in a situation that if you've got more than 3 properties, the lenders are going to consider you as an experienced landlord, so you're going to get cheaper rates than normal. Although the government is beginning to push up rates now, so you just got to be careful about the rate hikes. The second thing you've got going on is that you can take out a bridge against the property portfolio to borrow to buy more properties. And what I would suggest is because of stamp duty, you're having an artificial increase in price rises, because there's a bit more rampant or temporary demand for properties. So the trick here is to not get caught up with that rampant demand, but just to be on your guard, not to be looking at discounts, but looking at yields when you're buying or with value add. So if you're buying a property that's, to say, in Hounslow that's worth 500 and there's a value is 500, but the debt you can buy it for, let's just say, 250, and it's also got potential for building an extra house, and it's also got potential for a loft conversion or converting into an HMO. And as it stands at 250, the yield is 10%, say. So I don't think you can go too wrong with that deal, and you've got ample money to back you up in your portfolio if you need it. So the advantage with bridging finance is there's certain lenders that will lend you on the open market value. So they'll lend you on the 500,000. So you can get up to 75% or 70% worst case in terms of the debt. So you can buy your property, and because you've got access to plenty equity in your property, you can actually potentially get more money from the bridger to refurb your property against your assets.
Mm-hmm.
And let's say once you converted that house into an HMO, loft conversion, done the value add, got the income from it, you can refinance it out with term lending. So in addition, if you've got enough money, you can build that extra house, because you can also gear that up against your assets. So one of the fundamental positives is that if you're an experienced person in property, experienced property developer, you shouldn't really have too much of a problem to be sourcing excellent deals in this market, because a startup investor or a mid-tier investor, they may not have deep enough pockets to act quickly or to raise funds to be able to purchase. So there we have it. Somebody who's a bit more experienced.
It can be done. Okay,
yeah.
That's a comprehensive understanding of the question. Can you build a multi-million property portfolio up with bridging finance? You can. So the question is all about, if you was going to say to someone, you can do it that way, what are the key critical points you've got to be keeping your eye on? Is it that purchase price? Is it the cost of the bridging? And is it exit? Are these the three things or anything else?
I think exiting from the bridge is important, because what happens is if your builders run away, they don't do the work, which is what can happen sometimes. If you haven't got your own building team, then you need an exit. So exiting from a bridge is probably the most important. So I would encourage you to negotiate your bridging really well. But if you've got really good credentials, you're likely to get a cheaper bridge. You may even be able to get it at a rate of about 0.5 per month or 0.6 per month.
Yeah.
So your rates for your bridging are probably going to be enough to be able to get rents in and still make a profit, even if you rented out the property for 12 months. Because
so what the question is, bridging finance, even though it seems to be a bit of a scary type of finance, where it seems to have the impression of being expensive, as long as you've got good credit and you are clever with the way you purchase the asset, it's not a bad tool to use in this particular vacuum of a market where lenders aren't really that fluid in offering products. It's not a bad way to snap up that exceptional deal that you've got lying in front of you. Before I ask you the answer to that question, good morning to Amar Ali, Sonia, to Smith, Sajil Patel, Matt, is it Carolyn Williams, and I think Mina as well. Good morning to all of you. Thank you so much for being bright and early with us in the morning drive time. Obviously, question we're posing is, can you build a multi-million pound property portfolio from bridging? Yes, you can, as long as you keep a track on or a focus on key principal points. That's one thing. And the other saying of the week was day one or a day at a time, or something like that, which I assume has its own meaning to each individual. So, Lakhi, what do you think that means to you?
Day one or
1 day at a time.
1 day at a time. 1 day at a time means that you're taking everything day by day, and you're not necessarily being focused in on your first day and the key things you need to do. You're ignoring your critical activities that you need to get done. So the point here is that focusing in straight away on what you need to do and actually complete it is critical to anybody's success. So if you've got, let's just say you want to get involved in property investment, and you're thinking about it, and you sort of started reading the newspaper, started reading a little bit about it, that's actually like taking things day to day. Yeah. But day one would mean that you've decided you want to get involved in property. This is the best time to get involved in property since the history of property investment, let's say. So you decide to actually ring up your mortgage broker, you decide to speak to your solicitors, you go and see your local agent today. You basically also start drafting out your plan of action in terms of how you're going to do your capital raise, are you going to be doing cash flowing properties, are you going to be holding properties for capital growth over the next 10 years, are you going to be looking for value add properties, which location are you going to pick? So you start basically getting to the crux of what you need to deliver upon, and don't get distracted by let's just say things which have no results.
Okay, that's a good bit of advice here from Lakhi. So I mean, a lot of people get scared, I think, or frightened when you use these technical words like capital and capital spend and growth. Obviously it alludes to, I mean, you're definitely somebody who's got a lot of business experience, and like we've mentioned on many previous occasions, being a good businessman is keeping your eyes on the numbers. And I think we get a feel from when you talk like that you really are a man who knows his numbers, and obviously keep your eye on those numbers. Carolyn says, I think she's keeping an eye or observing your big bruise. So she's definitely got her eye on your big bruise. Question now is, you've gone through lots of different motions, and you just mentioned it's a perfect opportunity, a storm to take advantage of. What type of lenders do you have on your panel? What's unique about them? What is it that we can expect if somebody came to you, Lakhi Singh, the property fixer? Can you use bridging for business? That's I think a question that's going to be popping up in lots of people's heads. But you understand it's for property, but can you use it for business? Can you get a bridge for business finance?
Yes, you can. I mean, let me just distinguish that. You can probably get any type of bridge you want. A lot of it all comes down to your relationship with the bridging companies. But the more established the bridging company, and the bigger money they've got from a hedge fund, the more likely it's going to be cheaper money, but they'll be asking a lot more questions, and they'll want clean credit files, and they'll want like a vanilla case, as they call it in the industry, meaning that it's got to be all the boxes have got to be ticked from top to bottom. So that tends to be very institutional. Then you get mid-tier type lenders that tend to be very, they don't ask as many questions, but they still ask you the basics. But in this market, even the mid-tier bridging company asking a lot more questions, because they're being a lot more careful who they lend to. And then at the bottom of the market, you could sort of say you get a lot of private lenders. These are individuals or family offices that have, 5 million, 10 million that they've got sloshing around for property investments. But while they're looking for their investments or their their portfolio of investments that they've got, because it could be stock market, it could be forex, it could be whatever other projects or fintech type projects they're investing into. They will lend out that money on solid projects, but even they are, but even they are now being quite cautious.
Meena Patel says, well, Meena Patel says it's just like the solid project that your eye seems to be recovering exception. I think all the women have got their eyes on your eyes, Lakhi. So she obviously says that you seem to be recovering well. Carolyn Williams says that the portfolio scenario probably suits Sajil's business plan and yours, Lakhi, in terms of growing the portfolios and getting more properties. We've got a newcomer today, a Radish, I think, Mr. Radish or Miss Radish, I hope I'm not wrong. Says, Rudish, that's right. Rudish says, good morning. Is it a he or a she, Lakhi?
It's a he. He's a photographer.
Ah, excellent. Photographer. So Rudish says, top of the morning to you folks. So excellent. Hope you'll be taking pictures of your black eye for the album. Right. So day one or one day, a mental position. Either way, the question that is on everyone's mind is there is a volatile market out there, which everybody understands. We know it's a volatile market. We know it's very lucid at the moment. In your best opinion, Lakhi, can you see a major event popping up that's going to fix this problem? Is there going to be a fairy godmother of the loan to value or the interest rate or the loan to value ratios or negative equity? Can you see a fairy? Can you see somebody coming in from the Bank of England wearing a small frock and a wand and wishing away all of the negative stock? What do you think is going to happen? Give me one of your predictions or one of your assertions. What do you think is going to be the next main event to change around the situation? Whether for the good or the bad, I don't know. We know COVID's popped up again. Is that going to be the next event? Is it going to be now version 2, Jaws 2 type of situation, even bigger than the last one? Is it going to come back and then create more misery and pain and suffering? Or do you see something else happening? Well, what do you say is your feeling about what's going to happen next?
I'm not sure if you can hear me or not because my picture's frozen on the camera.
Excellent. That's right. That's a good start. You're frozen yourself on the camera. So are you trying to cryogenically? So you're freezing yourself cryogenically so that you can go to the future and defrost yourself and then be defrosted, yourself in the future in a microwave and come back and tell us whether the property market still is surviving or not. What are you suggesting? Cryogenics? Right, so we can't hear you anyway. So
to let me in. There we go.
Pardon?
Right.
We'll let you
Okay.
in.
So the question is, what do I see happening in the market?
Yes, you say you're frozen. So are you thinking of freezing yourself cryogenically for the future and then coming back and predicting everything that you thought would happen, but in the future and coming back and then re-predicting a bit like Michael J. Fox? What is it you're expecting to do? What's going to happen?
So what's going to happen is that the market, everything's going to come to a standstill in about June 2021, where the government was going to run out of money. They're not going to be able to keep the economy spruced up in the way that they've done for the last 7 or 8 months or so. So there's only a matter of time before they can't put any more money into the market, and they'll have to let the market, go into a bit of a free fall. I think at that time, if you've got a lot of cash and you've got access to funds, then the opportunity is that you can be the Rockefeller of the property market in the UK. It's the same thing that Rockefeller did in a crash in the last depression, I think, in America.
Isn't he the guy who beat up the neighbor because somebody was giving his wife a bad time? Or is that Goodfellas?
I don't know. That's probably some movie that I haven't seen.
Okay, cool. So you're talking about this Rockefeller. Who's that? Tell people who you're talking about, because obviously people don't have that level of knowledge and intimacy you do with the property world. Who is Mr. Rocker? Is he the same as Joey Pesco, the gentleman in Gangsters, who has anger fits and beats up people?
No. So Rockefeller is one of the most wealthiest, I think, is a Jewish sort of family in the world, and in the
most Jewish family in the world. What does that mean? That's a bit of a statement. That's not. How can you be the most Jewish family in the world?
I said he's Jewish.
Okay,
and
good.
He's one of the most richest men in the world.
Right.
And in the last recession or depression, I think, which was in the 1918s, they basically borrowed a lot of money, and they bought out all the assets at that time that were going for peanuts, because everything had come to a standstill.
When you say going for peanuts, what do you mean, sir? Are you saying they were being constructed by monkeys and they were getting paid in peanuts, and they therefore exchanged currency in peanuts for constructing, a bit like the Freemasons who were building properties for free? Monkeys were building these properties, and therefore they were being paid in bags of peanuts. Is that what you mean?
So basically, they basically saw what was happening in the market, and so property prices had fallen to their all-time low. So they cherry-picked some of the best assets in New York and took them under their belt. And it's just a matter of time before the assets went up over time, over a few decades. And so literally behind the scenes, they are one of the most wealthiest families in the world.
Okay.
So the reason I'm giving them as an example is, if you want to be successful in this market, then cash is king. So if you...
Cash is king. Okay, I like that statement. What does that mean? Is it the same as Singh is king, the movie?
No, cash is king means that if you have ability to have funds available to purchase, then you could be buying assets at maybe 50p in the pound in about a year from now, providing you get your whole structure set up properly. You may even be able to buy them less than that. In fact, through some of the projects that we've got now, some of our clients are already buying at 50p in the pound certain projects or property developments which have gone into default, and the lender wants their money back. So that's already beginning to happen on larger projects, maybe not on smaller properties, but unfinished projects, maybe around the 5 to 10 million mark. They are, if they're not complete, a lot of those projects are now being sold for a lot less of a value than they were maybe a year ago.
The topic you mentioned about debt provisioning, is that the reason they're going for such a cheap price? Is it that you need to be in contact with good accountants to get that discount? What do you say?
No, I think it's simpler than that. I think a lot of developers bought sites in good faith. They've had the money given to them for the purchase confirmed, and then they've also confirmed that they'll be having the development money for the project. So what's happened is a lot of the lenders that were involved in that market have changed their criteria, or they've overgeared, so they are not able to lend them that money for either the purchase or for the development. So this has left a lot of quite a large majority of developers, I would say, doing projects above let's just say 3 to 5 million in a predicament. So they're having to find joint venture partners, or they're having to find an alternative way, notice the word, an alternative way of finding a solution to still doing the project but not losing their profit. So
this alternative way of doing property and business is obviously what you're alluding to. The group that you set up is the alternative way. So business can be done still. Property still has value as long as you do it in the alternative way. And as we talk about that, we have both brothers on, Harry and William Royalty, obviously, who are liking this cast. So shout out to both of you guys, Harry and William. Both of them listening to us at the same time. One makes you feel like he's just one person. But yes, Harry Williams is giving a like out to this stream. Okay, so cash is king. But if you haven't got cash, you've got bridging finance. So really, somebody who is clever enough could be taking a major advantage of this market by making sure they take good asset and sell it at a bad to a better buyer at a good price and make money in between for just the pleasure of having a contract, even without exchange. Is that correct, Lakhi?
Yep, I think you just have to, basically, it's going to be, let's just say it's going to be definitely going to be a buyer's market in the next year. So what we're doing is we're setting a lot of tools and facilities for anybody who's actually getting ready to start purchasing in a quite a vibrant buyer's market in about a year from now. And we've been prepping with our Proptech project to facilitate their to be able to purchase en masse. So that's what we've been working on in the background.
Excellent.
And top of that, we've been developing our local databases of buyers and sellers across the whole country, from Scotland, Liverpool, Newcastle, Birmingham, Wales, London, mate, and Kent. I can't do Kent.
What? Kent.
Right,
okay, Lakhi Singh, apart from you being an excellent impressionist, so you're saying it's going to get really difficult, and we understand that. You're thinking the market's going to have a major flux, to understand that as well. You're saying that money's going to get tight, we understand that. Property market is going to devalue, you understand that. Where do you see the horizon then? When you talk about something called, you said it there again, you mentioned it a few times, Proptech. What is that? Is that like a propeller that's made of technology? Is it a profession of technology? Is it a property that's got technology in it, like iris recognition machines and biometric locks? What is this Proptech you keep mentioning? And should people be looking out for it? Should they invest in it? Because if you're saying that is the future, Proptech is where the money's at, what should people be thinking about then? Is that where the money should be put into? Should a lot of the people listening to the alternative business and property solutions community want to, is it like a REIT that they can put money in, take money out, and get the benefits of property without having the direct investment into a property? And if you can, for the viewers, explain what a REIT is, because that's probably a very important thing that you've got knowledge on. What is a REIT and what is Proptech?
First of all, Proptech is a simple abbreviation of property technology, and you could call it blockchain. So blockchain is basically, the definition is when you streamline all your processes so that they're all based upon a technology, but the processes are so synced together in the supply chain that you're reducing the cost and you're allowing you to scale up as a business. So that's what we're looking to roll out in a buyer's market to compete against organizations such as Purple Bricks and Rightmove and Zoopla, all of which will be struggling in this market because a lot of people won't be able to afford, the estate agents won't be able to afford making their monthly payments to them, because if the market's drying up, the estate agents are going to find it difficult to sell using those search engines, because they're not really going to be able to do much because they're targeting the residential market. The market that's going to become very busy is the property investor market for buyers and sellers. So our particular market is people that are buyers and sellers who are looking to not rely upon traditional tools, which are likely to be rusty and inefficient, but they'll be relying on a new type of solution, which is, let's just say, blockchain and sophisticated to be able to meet their needs. So
Excellent.
I hope that answers the Proptech
That's the
question.
definition of Proptech. So you're saying a property company based upon a technology as its principal factor. Is that right?
That's right.
And you're competing with the likes of Purple Bricks, and I believe Purple Bricks is a cloud-based technology or Proptech. Is that right?
That's right, yeah.
Okay, so we understood what Proptech is. Now, can you explain the other bit as well?
The REIT.
Yeah. Is it going to be like a REIT? Should they look for Proptech as a way of doing business? So, I mean, the question is, so a lot of people who are on this group who are trying to look for alternative ways of doing business and property. Proptech sounds like an alternative way of doing property sales. Is that right, Lakhi?
Yeah, so basically that the technology is one piece. The other piece is the concept. The concept of the Proptech project is unique in the sense that our organization will be the only one that is offering even now 0% commission on a sale. So if anybody's out there looking to sell something,
0%, Lakhi.
That's right.
You mean you're not be charging the seller any monies for the sale?
Yeah, that's right. The only time we would charge a percentage is if only the vendor said to us, look, I need the property sold in the next couple of days. I'm happy to pay premium for you to actually speed track my sale. Mm-hmm. So that would be one part. And the other unique selling point with the Proptech is that it's got a different sort of algorithm. So it will allow people to solve their problem. So it's a solution-based.
Okay.
You could say solution-based portal. So if you're, I think some people are here now deciding whether they want to get involved in property or not. They're not quite sure. They may, but they'll be able to go in. But it'll be a bit like going on holiday and using TripAdvisor, trying to work out where's the where's the cheapest place, which is the sunniest place, what are the the best hotels, which is the airline they want to use, is it full board, which, so actually you basically got 6 or 7 criteria when you're picking a holiday. And is it going to be self-catering? So in the same way, the engine that we're developing will be a little bit like TripAdvisor as a sort of analogy to what we're doing, but it will be even better, because we're not just going to be talking about the postcode, which is what Rightmove do. You just have to type in, I'm looking for a 3-bed house in Ruislip, and it's got to be, it's got to have a garden and a blah, blah, blah. This is going to be a lot more sophisticated, because when you're looking for a house or a place to live, I actually spent about a year looking for my residential house where I lived in. And had I had a tool like the one we're developing, then my life would have been a lot easier. I could probably, rather than spend a year looking for it, I probably would have done it in a matter of minutes. And the difference would be that you would have the star ratings based upon a different definition of property. So, can you add value to it? It would be 5-star if you can build a house next to it, of course. It would be, is it near hospitals and a local shopping center and schools? And it'll have different ratings based upon amenities. So obviously, if you've got elderly parents, they're moving out of a village to be closer to a town center, so they can be close to conveniences. Then we're going to be able to solve a lot of problems for people.
So you're saying rather like TripAdvisor that gives you a rating. So you're going to have what? Market value rating? So what the property is worth in the market. Is it a good rating? Means something that's worth 100,000 being worth 80,000 would have a higher rating than would a property being worth what the market says. Is that correct?
Yeah, I think that's right. Yeah.
And then you've got the rental ratings. I think you're gonna give people an immediate understanding of, does this property have an X amount of yield? So anything yielding over 7 will probably get a 1, over 9 probably a 2, over 11 a 3, over 13 a 4, and then over 15 like a 5 rating, that type of thing. So rental rating, is that correct?
Yeah. So
and then your third one being, I think, because I've read the document, the principal document, or the idea behind what you're doing. And then the third one happened to be value add rating, which goes back to what you said. Has the property got the potentials of being built on or extended upon? That would give it a rating. And then you've got commercial rating and residential rating. So, I mean, commercial, as I understand it, would be, is it near an industrial park? Does it have a lot of shops, employment potential? So has it got a business park? Is it connected with the rest of the country in terms of, could you be on the HS2, sitting on a train, going straight into London every day, coming back out? And then the residential rating being, does it have a hospital nearby? Does it have good schools? Does it have a park? Does it have a shopping center? Is it good, access to the town? That star rating, immediately you're saying, will give a physical print to somebody who wants to know how good of a deal it is for their particular requirement. Is that what you're trying to say, Lakhi?
That's right. And one of the things that we've been looking to do in the Alternative Business Solutions community is probably in the next couple of weeks is putting out some of the modules that we've got, just to get people's feedback. And so basically, if you want to have a simple access to one of the best tools in the market, then this will be the place to be.
Excellent. Okay, we've got a good morning that's coming.
Ching,
a good morning in. Ching, ching. Yes, we've got a good morning coming in from Mohsin Rajani says, good morning, gents. I assume he meant gentlemen and not that he's in the gents, saying good morning to us. We've got a question, intelligent question from the lovely who says, a lot of people going out there, direct marketing, throwing leaflets through letterboxes and asking people if they want to sell their properties for cash. Is it a good idea? Does it work? Well, Sajjo, my answer to you is it is not a new strategy. It's always been there. Lots of agents use that strategy. And sometimes they drive around and see the boards that are up in terms of even letting or sale boards, and then contact the landlords by doing a search on land registry of their owners, writing to them and asking them whether they would be up for selling or letting the property out. So it's not a new technique, it's just an old technique. Whether it's going to work, I think, is a question we can ask Lakhi Singh. Is it going to work, Lakhi? Putting leaflets through letterboxes directly to owners of properties, does it work? Have you tried that? Have you tried putting your letter in through someone's letterbox?
Yes, it does work. But a lot of it is based upon volume. So sending out leaflets to a couple of streets is not really going to get you the result. So you've got to do tens of thousands really to be able to get a result, or have regular leads coming in for you to qualify.
Okay, so volume is key. So one part is volume. Mohsin Rabjani also answers that question. Got his eager eye on the comments that are coming in. He says everything works. A man who has put his fingers to lots of things, and he says to you, Sajjo, is consistency. So it's got to be consistent and it's got to be volume based. So there's 2 points there for you to consider. Anything else, Lakhi, in terms of does it work?
Yeah, it definitely works. So even the best of areas, such as Chelsea or something, people will still contact you because there's always people have changes of circumstances. And
so you're saying if you put a letter through Mr. Abramovich's letterbox, he's going to respond to you and say, yeah, I'm up for selling.
It's just a numbers game. It's a numbers game.
Okay, so if you wanted to buy Chelsea, it's one way of trying to get in contact with them.
Yeah, I mean, whether you have luck in like the multi-billion-pound houses or not, that's a different matter. But I'm talking about the streets, the normal streets in Chelsea, where they've got flats and houses. People will still respond if somebody needs to sell quickly, and you send them the quality, let's say, quality leaflet in a quality area, they may respond.
Okay, Mohsin says, and this is a bit of statistical. We're talking to Sajjo, being an FC, very good with her numbers. He says that 44% of the United Kingdom are not tech savvy. Surprising. You'd expect people in the United Kingdom to be quite tech savvy. I think the most that their tech goes up to is WhatsApp, possibly. And Mohsin says, well, it probably has got more effect by doing it the good old-fashioned way at the moment in the United Kingdom than using technology. So again, Mohsin reconfirming that doing it the good old-fashioned way, direct marketing, so being consistent, having a volume is 2 ways, and then being lucky, which Lakhi says is consistent. And he says, yes, it could work. And 44% of the United Kingdom are untechy, so they're not tech-friendly. Excellent. We've got Mr. Nur this morning tap dancing. So he's definitely making moves this morning. He's up and he is giving it a hi to everybody. So Lakhi Singh, Proptech, we've understood now. But it's a bit there, isn't it? There a bit of a wet nappy for you, knowing that only 44% of the public are tech savvy. So this Proptech company, who is it appealing to?
Well, a lot of buyers and sellers are, let's just say, they're going to have to actually get out there and get their property sold. And you don't have to be sort of internet savvy to actually come onto the platform, because you just have to contact us and we will do all the techie bits. So it's going to be very user friendly. So even the 44% of the people out there that aren't tech savvy, they're going to have a mobile phone. They're going to have access to talk to somebody.
I think Watson is reinforcing that point by saying, actually, it's more people in your age bracket, over 60s, Lakhi, who are probably less tech savvy. So it makes sense if the population in the United Kingdom are plus of 60, and there's obviously those who are kids who don't really have any interest in using a property technology company because they haven't got the money to purchase. He's saying 44%, so a majority of that being your age, Lakhi, and over. So they're not able to use technology.
I'm just choosing to ignore that joke because I think you're getting your ages mixed up at your age.
Yes, probably a memory lapse I've got. I'm very bad with numbers.
I think looking 60 and being 60 is quite different.
Right, okay. Having said that, we will ignore the comments from Lakhi Singh, the property fixer, as it is that you're fixing my understanding of age.
I can't fix age, unfortunately.
As you are the property and the business fixer. Yeah. So, okay, I hope that answers Sajol's question. Yes, it will work, Sajol. You can go out on your pretty little feet and go around town putting through those flyers. It will work, but I would say need to get your feet massaged at the end of the day. Probably a good idea, or possibly better, employ people to do that and just sit back and count the money. Ching, ching, ching. Right, Lakhi Singh. So, day one or the first day? Is it going to be like a day one moment once your first prediction comes true? Okay, a lot of people keep referring back to the early 1900s when they keep saying, worst day ever since this, worst weather since. Remember, there was a world war on. Are you predicting there's going to be another world war then? Is that what's going to happen?
I think the distraction of war is always alluring for a lot of governments, because it distracts the populace onto looking after their main concern, which is food and shelter. So the more governments can scare people to make them worry about the basic necessities based upon Maslow's hierarchy of needs, which is love, food, and shelter. If those are affected, so obviously, if you can't be with your loved ones, there's a possibility you might not have enough a job, and you got you won't have a roof over your head. If you haven't got any finances, you're not going to be able to get any food. And if there's a world war of sorts, then you're going to be worried about your nest, your house. So I think the more the likelihood of a war occurring of sorts, even if it's just a skirmish, I think it's going to be very high, because that will be a distraction.
Okay, a scary thought for Mr. Singh there to leave us with the property fixer. There could be something looming. If we're comparing everything back to early 1900s, there was a war then. Is there going to be one now? Lakhi says Maslow's higher theory of needs suggests that maybe so. So we will leave you with that frightening thought. But what we will do is we'll come back tomorrow at 8 a.m. to 9 a.m. We may have a guest in tomorrow morning, I think. I'm not sure. And we will continue with the topic of this week and the saying of this week, one day or day one. And we will see you tomorrow, sir. Lakhi Singh, and thank you, everybody, for the comments you brought in. Lots of interesting feedback, lots of interesting debate.